Futures indicate a slightly higher open on Wall Street following another warning from Fitch that rising debt in the U.S. was not consistent with maintaining its AAA rating. Yahoo catches a bid on reports that it may consider a sale of its Asian assets. The board is expected to discuss broad outlines of the offer. There is a slew of economic data to be released, including Q3 GDP, jobless claims, Chicago Fed National Activity Index, consumer sentiment, November leading indicators, and natural gas inventory. I'm Jill Malandrino, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with the Streets Options Profits, and together we bring you the morning call. So traders, if you're looking to relax after today, that's going to be your day. We have a lot of economic data coming out today, including Q3 GDP and jobless claims. We have another headline-driven market. We have Yahoo looking to potentially sell Asian assets. There's a lot going on we have to get through today, but we also have to review yesterday's action before today's trading plan.
Let's hope that the fix is in until the holidays, because I think traders are finally trying to feel a little comfortable holding stocks after Tuesday's igniting move. Tuesday's move put us back in a confirmed rally. Doesn't mean we have to have an enormous move, but put things on the table for some type of follow-through. And yesterday I came in, and I was just hoping to get some of the follow-through because I positioned on Tuesday, and then you had Oracle come out with their disappointing earnings. We weren't exactly sure whether or not, the devastation would be, I would say flowed over,
right,
which to the other stocks in the sectors, and you did see it. You saw it in IBM, you saw it in SAP, you saw it in VMware, you saw it all across the board. So there was I was getting a little skeptical, like, oh my goodness, after finally a good day like we had Tuesday, everyone started to get a little comfortable. Are we going to be able to hold, or are we going to be back to the same frustration that we've had over the past few weeks? So lo and behold, Tuesday, in the afternoon, some of those stocks came off their lows. The Dow and the S&P actually acted better. Some banks acted better, and then we closed well. So that breeded a little bit more confidence to hold for the next few days.
Right. Well, what's tough at this time of year is that volume gets really light, which means volatility has a great chance to move around so much, because any move in any direction really affects prices more than it normally does when you have more liquid flow in the market.
Yeah, so that means you just have to be in a little less so you can have more control, because if you have too big of a position and there's no one on the other side of the trade, you could be right, but you can't get out. So you keep it tight, you try and make money into the end of the year. If you look at the chart of the S&P, you will see that yesterday we did hold in there just fine. Here's the SPX. This was that big bar I was talking about on Tuesday. That was like the December low. So here's the October low, the November low. Let's hope that this is the December low pivot. And then yesterday we held the top third. So now we're approaching this resistance again. I don't know if we're going to be able to break through this before the year end, but between here and there, you do have about 20 handles in the S&P before you reach there, and that 20 handles could be enough, to make traders happy and give them some extra profits if they're going to be in town for that type of move.
Okay, let's move into some sectors and some stocks. We're going to kick it off with the exchanges. Now, this is one of those groups, almost like when we talk about Apple and you. It's like one of your favorite stocks. You love to trade it. The exchanges are something that's near and dear to my heart. I do a ton of work on the exchanges. I'm at 2 to 3 different ones each week, but there's lack of confidence in the market and conviction, and the fact that we had this MF Global debacle, there's a lack of confidence in the exchanges themselves, and that's tough for our business. It's near and dear to us. So let's take a look at CME. That stock got whacked yesterday. Again, they've seen less volume because of the MF Global debacle, with farmers pulling money out, investors pulling money out, traders just not being able to trade.
Right, so you combine, all that thesis with the technicals, and it does look like they could go lower, because everyone's complaining about the volume. What does that mean? If we're in a low volume environment, that's less fees and less revenue for the exchanges. So if you look here at the CME, you will see, we've had some good cash flow trades this year, as you've had some moves off this 235. I think a few times we traded and even had option strategies with your service. But then this last one that broke this little uptrend, was a little severe. Look at this wide range bar. Came back up, retested, and now it's just by a thread hanging on to 235. If this 235 breaks, if you look more on the weekly chart, let's actually go even to the monthly chart, you will see that there is a lot of room under this level to go all the way down to where we were here at about, 155, with a short-term stop right here at 215. So watch 235 breaks. Here's your 215, and then this is your major support well underneath it if the volume continues to be light and if we get another blow up like MF.
Moving along to Intercontinental Exchange, ticker ICE, again, another OTC futures derivatives exchange.
Right. Well, this one I looked at the chart is acting a little bit better than CME. So if you take a quick look here at, ICE, you will see that it, is holding a bit higher. CME is almost at the lows that ICE would have been if it was down at 105, so it's not quite there. It's still controlled by this downtrend, so it still doesn't look great. It's below the moving averages. If you want to trade it long, you could trade it long versus 115, but if 115 starts to give out, or this pivot low here of just say, what is this, 113, you could see a move back to those lows. So if CME breaks 235, the group might move together. Just make sure you get out of the way and maybe even look for a short below 115 because you can short stocks in this market as well.
Right, right. Moving along to, if I had to pick a spot within the exchanges, I'd take a look at the NASDAQ. They've outperformed their group. The revenue has grown 25% versus 15% peer. This is a more diversified exchange. They're not as reliant on trading revenue as some of the other ones.
Well, as I look at this chart, it looks like Swiss cheese. It just doesn't look like anything compelling. The bars aren't wide. There's no real patterns here. I guess if you have to hold one of them, this is actually well off the low. So if you look here at NDAQ, also there's, I guess, a little takeover talk here and there. This was the uptrend that was somewhat in place, since August, right? So now it basically broke below it. It's hovering below it. It's below all the moving averages. If NDAQ can't get above 25, you're going to see another discount if it breaks this pivot low of 23.5. So overall, I'm looking at the charts of all these exchanges, and I really don't like them as of now.
And I'm rounding it off with NYX, New York Stock Exchange, Euronext. Right across the street from us, more antitrust issues regarding the merger are still, in fact, today we saw some more news on that.
Right. This one, with that overhang there, I would just say, if you're in a long-term holder of it, stay with it. If you believe in the merger, that's fine. But trading-wise, we've avoided it. Like I'd say 6 months ago, it was a good trade because you had the potential to take over. But then now the back and forth nature of it could definitely drive you nuts if you're short or long. So, I'm staying away from NYX.
Right. So it looks like diversification, as with most sectors, is really the story here. We are going to jump into a quick commercial, and when we come back, we go into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We jump into the trenches with the tech space, and it was slammed yesterday with Oracle comments saying that spending doesn't look quite as good as we thought it might have.
Yeah, and that's always a negative because especially a company like Oracle that's always taken things in stride. It's been an institutional favorite, so everyone's kind of thinking what else could be next. That's why you saw stocks in that group get pummeled. So as far as today with Oracle, I think there's some opportunity. Yesterday around lunchtime, it started to trade off the lows. It started to trade off of the summer low. If you look here at the chart, you will see a few things here. First, you could have seen a little bit of this from the charts. Okay, here was that top area that broke, the momentum and came, just corrected. Then you had a rally back, created a lower high, and then it started to trade underneath the moving averages. And it was right at support before that news, so people weren't expecting much. They didn't expect, the major disappointment. So PS, if you were in small, because technically it didn't look great, now could be an opportunity. You have the lows here back from August. It did come off those lows. As a trader like myself, I'm going to see if this could trade above 26. That means it gets into the gap, and gaps like to get filled. The question is how much. So for me, I'm going to look to potentially see if I could buy into this gap, and if Oracle starts to trade into this gap, you're going to see a little bit more strength come back to the tech sector today. Right.
So moving along to Red Hat, another name that's had some booking weakness as well.
Yeah, this stock was broken well before the news also. If you look here at the chart, you definitely could see some some signals. So if you look here, you had a high, lower high. Even before yesterday's news, it was below all the moving averages. I guess you could say, now it's trading versus, the support from September. If you look at Oracle came all the way down to the lows of the summer. So this is holding a bit higher. I think for the trader, maybe you get a move back to 44. I guess if you're a fundamental guy and you think that buying the dip's going to make sense, to me, this looks broken and it's just an avoid.
So let's take a look at VMW and CTXS together. These names, we could see some improvement in 2012 relative to the rest of the group because companies are spending money on platforms that save money, and that's what these two companies do.
Yes, and VMW is near and dear to me, but it just shows you how things change and your go-to list change. Like 2 years ago, this was my stock, and it went up like almost 100%. I talked about it every day. It was on the list every day. And I really don't even remember saying VMW almost in the last 2 months. So that tells me it must have been showing relative weakness, not compelling. And when things have relative weakness and they're not compelling, usually they forecast something bad on the horizon. And if you look now, you look where the stock is. So if you're not involved in BMW, now's an interesting spot to potentially take a look. So look here at the chart, you will see, you had your top here. Remember that great earnings that it reported and was sold? I guess that forecasted something. Then you had a lower high, another lower high, getting below all these moving averages. So it was definitely forecasting something. Now the question is, what do you do? If you didn't sell into this and you're still holding it, I think you're holding your nose and going underwater. Okay, if you want to trade long versus a level, you now have a pivot here of 74.69. But if this stock can't rally, I think it was upgraded today, back to above 84, 85 and go sideways. You look at the weekly chart here of VMW, this is a huge level. If VMW can't bounce and hold, back above 85, this could be a short if it breaks below the 74.69, in the coming weeks or so. So watch this level very close. On a daily, it got beat up. On a weekly and a monthly, looks like there's more room if they want to beat up this group. And
quickly, let's take a look at CTXS. I just want to see what it looks like relative to VMW.
So CTXS, on it's not as defined on a weekly basis, but if you go to the daily basis, it also got beat up. You have a high or lower high below all the moving averages. There's no need to be stocks or long stocks that are so technically weak, and right now this still is technically weak, I guess, for cash flow. Same type of strategy, trade it versus that 56.79, but if it can't get going, you could see it move down to bigger support here at 50.
And rounding it out with NTAP, it's been relatively quiet. I haven't heard much news on it.
Yeah, me neither.
But I mean, obviously it moved to the group yesterday.
So let's take a quick look. So if you look here on the daily chart, you will see, not much to talk about here. 200 days all the way up here, below all the moving averages. It actually is showing some weakness here where you do have a defined support at 34. So I guess let's take a longer term look here. If you look at the monthly event top, if it breaks this level here, it definitely, just like the rest of the group, could have a move lower. So watch this 34 area. If it breaks below here, there's a lot of room down to maybe even 25. So this group is battered and bruised as it's been.
Right.
It's still on the radar that if it doesn't bounce and the composure doesn't change, it could head lower.
We don't have IBM on the ticker list, but we have to take a look at this name. Everyone's been in love with this stock for a good part of the year, but it has a lot of tricky action. So not on the list, but we definitely have to take a look at that.
Yeah, when people get so comfortable with the stock, you always have to worry a little bit. And this was on my list for follow through into the end of the year until it lost its momentum. So if you're a chart reader, you could have seen some of the signs here, because if you look here at IBM on the daily, you will see this is when it was holding tough. This is when it was above that 190 breakout. So as long as the momentum stayed, you could stay with it. Here was that eye-opening day that said, maybe it's not going to break above 195 and go to 200, so you had to lighten up. Then once it broke this, you had to leave. If you were playing it for momentum, this is when momentum left. Then you had to move to retest this uptrend that's been intact since September. Yesterday, we breached it a bit and then came back off the lows. So let's see if it tries to fill some of the gap, just like Oracle. Potentially it could get up to this 184, but if it can't get back above 184, 185 and stays below this, you could see a move to test this 177 and then maybe even the 200-day down at 173. So to me, if you're long-term IBM, tier 1 as a trader, maybe trade versus yesterday's pivot, but if it doesn't start to act better, there still could be lower prices.
All right, let's move into quick hits or some quick cash. Starting off with Apple, we love to talk about this name. I read something really interesting on Bloomberg this morning that iPhone sales have been coming down a bit due to a weaker economy in Europe and that there's competitors that are way better priced. It's the first time I've really seen that type of commentary around the iPhone sales.
That's interesting.
Right, because the stock hasn't reflected it.
Well, it looked like it was starting to, get that bearish head and shoulders top pattern, which it's still kind of there, but lately it's been acting a lot better, so you have to respect the action. I am long Apple. I thought it had a really nice wide range bar, took out some of all this resistance. Now it's trading right near 396. If it can close above 397-ish, it's got some room for Christmas to about 410, and then you have massive resistance once again.
And on the flip side, Google, they in the same report, 46 to 61% market share across all markets because their platform is free.
And this is my stock pick of 2012 on the weekly and the monthly. It looks awesome. It's got to get above 632 to 635 in order to ignite another move. Right now, it's still in that upper range. I'll show it to you real quickly because I know we're running out of time here. It was very shaky yesterday, but it's still, as long as it holds above this, just say 615, I still think it's in the cards. The momentum will stay for a move at the beginning of the year. If it breaks this, if you're uncommitted, you could get a move to the 58, 600 if we start to break down in tech. But overall, on this weekly chart, it really looks good. Actually, I'll show you on the monthly. It's just banging at that door here. It looks like it's going to get above this, and if it gets above this, no stopping it to about 750 or higher.
That's a great pick for 2012. I love that one. Goldman Sachs, not a pretty chart.
No, but I'm in there long. Bank showed some strength in the afternoon yesterday. I just think Goldman Sachs can get to 94 to 96. I'm just playing it for an oversold cash flow bounce.
And Dollar Tree.
Dollar Tree actually has a high-level flag, which I haven't seen a lot, and retail's acting better yesterday. We had a group, really good call on JCPenney's. JCPenney's broke above, this nice little level here on the daily chart. We talked about it yesterday with Alex at 34. So this Dollar Tree is kind of interesting where, you have a high-level flag. If they let anything break out, this is a candidate to break out above 84, above the moving averages, not like all those other stocks that I showed you. So retail is still strong. This is, in the cards for a breakout if they let any stocks break out.
Let's close it out with the OIHs, which was your off-the-charts mention with Kramer last Tuesday.
Yeah, it's still holding up. It shook me out of some of my shares, but overall the inverted head and shoulders pattern is still intact. The right shoulder's building. Right now you should be in a tier 1 if you stayed the course. I'm looking to try and get back in. Still looks pretty good here. Left shoulder, head, right shoulder. I got stopped out right here, so it just shows you that I micromanaged it, but it's still intact. In this whole area, I think you could be in a tier 1, and then finally, if we get going in 2012 and it breaks this downtrend that's moved to 121, this is where you would add for a potential move to the bigger neckline. So there's a lot going on here, tier 1 at best, and just trade it for cash flow with the stocks. Okay, so it feels like today is like the last big day of the year that we really have to go through. So Scott, for next week and for the end of this week and next week, how are we positioning ourselves? Right now I'm long about 6 stocks, and I'm not really hedged. I'm actually long the spiders also. I feel like once we get closer to 1250, maybe I'll sell some spiders, and then I'll try and have a hedge with the positions that I like, because it's a very have and have not environment right now. Stocks that you thought you could trust, still not acting well. Amazon's not acting well. Baidu's not acting well. Sina's not acting well. Obviously, we saw the damage with Oracle and some of those big name stocks. So you really have to pick and choose your battles here if you want to fight. And since I'm going to be in here for the next week or two, I'm not going to fight with both swords, but I'll take one around and try and make some money, as there are things to do if you could look at the patterns that's set up. All right, well, we have a lot going on today. Don't forget Q3 GDP and jobless claims. Don't forget to catch Scott at the end of the day with the wrap-up of the charts to see how the action plays out. I'm Jill Malandrino with The Street. That's your morning call. Have a great day.